Good morning, traders and investors. Today we have a very special day because after AMD reported their highest quarter earnings ever, 7.7 billion, and yet the margin collapsed. Well, it's time to analyze AMD from a fundamental and technical level. And let's see, is this a buy, a sell, or hold in the current conditions? Or should we just wait a little bit? Maybe darker days are coming for the entire market, but not for AMD. So let's get started with the video. I'm Norbert Menhardt. I build and protect wealth here at Wealthtown. If you want to join me on this mission, hit like and subscribe. And let's get started with the video. So AMD, well, I think I already did a video on their results. Exceptionally good results, high growth rate. In the next 3 years, they are expected to grow exponentially. With last quarter, grow 7.7 billion, 32% year to year, and gross margin 30%. So if you don't know what AMD does, have it here. AMD is a CPU, GPU, and accelerators for PC and data center and gaming console provider. Okay, so basically they build chips. Well, they don't build them per se. TSMC is a builder, but they do design them and manufacture. And at the end of the day, they are the sellers, they are the retailers. They are the designer of their own chips. And why do traders care about this? Well, because it's a key player, I would say, right after NVDA in the booming AI data center market, and the stock has surged this year on hopes that AI chips are, or their AI chips are between the winning horses. Because at the current moment, NVIDIA is crushing the game. NVIDIA is the winner here. But now AMD is trying to catch up. So a couple of earning highlights here. I said revenue 7.7 billion. Previous quarter 5.8 billion. So that is just incredible results for AMD. A GAAP gross margin of 40%, up 40%. Actually, they're down from 49% a year ago. Okay, so quarter 2, 2024, quarter 2, 2025, 49 to 40. Non-GAAP gross margin 53 previous year, second quarter, 43 this year, this quarter. They also had a one-time charge of 800 million in inventory-related charge, like the US export restriction on the Instead MI308 GPUs, and this is excluding the non-GAAP margin. They would have been at 54%. So this would go higher if this wouldn't exist. Okay, basically that's how you need to calculate this. Also, it kind of says it down here. I'm going to leave a link in the video description, actually in my Substack. So you're going to have a link to my Substack. I have all of this information written down and also all of the useful links. So definitely check out my Substack. Now, moving on, operating income, 0.3 billion, yes, last year, 0.1 billion this year. Non-GAAP, 1.3 last year, 0.9 this year. Diluted earnings per share, 0.54 this year, immensely higher from 0.16 dollars per share, and non-GAAP is 0.48, which is down from 0.69. But remember that 800 million, which basically would lift this would be then 43 cents. Okay, now let's go a little bit further to data center segments. So revenue, 3.2 billion this quarter, up from 2.8 billion last year, same quarter. So revenue is up 14% year to year, and operating margins 5%. A operating income loss of 155 million versus 743 million a year ago. I'm going to jump over client and gaming segment, although they had good results. So 21% operating margin and 3.6 billion revenue, which is pretty good. And now let's jump to their financial outlook. So revenue quarter 3 to be 8.7 billion, roughly 300 plus minus million. Gross margin to be 54%. Just imagine 54% gross margin. And operating expenses 2.55 billion. Interest expense, other income 10 million, and effective tax rate of 13% of pre-tax income. So diluted share count 1.63 billion shares. Okay, was almost it for the fundamentals. Now let's see what they're expecting, what the market expects. That AMD, not at NVIDIA. We're going to do a NVIDIA video also, and then we're going to do a NVIDIA versus AMD video. That'll be perfect. So what does the market expect? For this year, a average 9.4 EPS, which is a 3.94, which is up from 3.31 last year. And then just take a look at 2026. Boom, 6.42. So from 3.94 to 6.42. Then 2027, almost a double again, 9.80. That's not a double, but a massive increase, 9.85. Then 2028, 11.71. 2029, we have 13.8. So growth is expected. And also 2026, there should go just a little bit deeper or less growth than 2027. So actually 2027 should be the best year. So the question is now, has the price pulled in everything from 2026 already? And is this a good moment to buy this stock? Because despite the top line beat, the stock moved modestly and in some cases slipped. And here's why. Let me also show you a chart here. Go to AMD. Get here what it did is 61 Fibonacci extension and is now currently right in the mid of 127. But no technical analysis right now. So margins are under pressure despite growth. Investors that see that 800 million charge and slowing growth in the data center segment. So that is a red flag. The forward guidance is ambiguous, but execution risk still remains because they still have to execute on everything that they promised, especially with the AI accelerators and the export issues, because the China thing is not quite dead yet. So for a trader's viewpoint and from an investor's viewpoint, actually from an investor's viewpoint, growth is real, but for a trader's viewpoint, risk is high. So markets may wait for proof for the next leg up. And also, I'm going to read your commentary from the CEO, Lisa Su. We're developing strong revenue growth in the second quarter, led by record server and PC process sales. We are well positioned to deliver significant growth in the second half of the year, driven by the ramp of our in-stacked MI350 series accelerators and ongoing EPYT and Ryzen processor shares again. So from a trader's lens, that means that management is beating hard on the next-gen AI accelerator ramp and CPU shares gain. So the upcoming product launches are critical. They need to succeed with them. Now, the mentioning of a ramp is maybe a cue for watch the volume, yield, and margin trajectory. So they need to do something parabolic in order for us to get again excited over the stock. Now, a couple of key recent news we have here we have a report from Los Angeles Times. Then on 12th of November, this was basically yesterday, reports show AMD shares rally 9% after CEO Lisa Su projected 35% compounded annual revenue growth over the next 3 to 5 years, citing accelerating AI momentum. Now, if you want, you can read through this article. At the end of the day, they will sell more. That's their projections. Still, they need to execute on this. So analysts have upgraded AMD stock, seeing long-term growth potential tied to the AI chip and MI400 Helios, which is named Helios, roadmap, and they upgraded to that 35% revenue growth. And that was basically the upswing here yesterday on the chart. Okay, it jumped up and then it came back a little bit off its jump. So let's be realistic here. If this candle should have held if this news was that great. Again, here it was already priced in. Here, I know it gave it back. So let's just do a recap on the fundamental view. Strong growth in client and gaming segment, 69% year to year, major tailwind. Data center segment that hopes a 40% year to year and margin hit by export inventory. So if the exports really tick up, then we could see a next leg up. Remember, there are still export restrictions on their chips. So solid balance sheet and FCF mitigations, well, some risk there. The key risk factors are the execution of MI350s and MI450s accelerators, export license delays to China, margin recovery, so far and so on. And also do not forget that they do have competition. And the biggest competition is NVDA. And some of these the last boost was from OpenAI taking state in this entire thing, or actually giving them the possibility of a big backlog for their chips. Now, if this does not come to fruition, and if OpenAI has any kind of hiccup, AMD could see a major crumble. Don't forget, 2024, the March of 2024, it took for it to find from its peak, which, let's go even further back. Last peak, 2021, went down from, and we're going to do some technical analysis now, went down from $165 a share to its bottom of $56 a share. Now, it was not only cut in half, more than half the stock price. Then it went up in 2024 to $230 a share, came down, find its bottom at $75 a share, slightly above its last bottom. And now we're playing around here with its last peak at $260 a share and struggling there. No more catalysts at the current moment. So let's just think about it. Let's be realistic here. Let's even do a couple of options play. We have major support at the 25-day moving average, which we also had last time. And then it just crumbled. Didn't crumble at once, everything all at once and everywhere, but it took it slowly down, hitting the 20-day moving average, hitting the 50-day, the 100-day, the 200-day line. All of them hit one after another from March to the lows of April, and then it just went down. Could we see this happening once again? And could the next target be somewhere in the 100 levels for it to find its bottom? And from there, rising like a phoenix out of the ashes, we could buy massively in AMD. It could happen. It could also not happen. And AMD, with these projections, could go even higher. But the probabilities are strongly against it at this moment. Because I think that this right here, little circle, this right here is actually everything in 2026. That the entire gains in the price will pull forward. So we are sitting currently at the RSI of 61, not overbought. It was overbought right here in the beginning of October, and from overbought it went even higher. Now we have a key support level, first level that it needs to hit and also remain underneath of it is 240. Then we have our 215 at the 50-day moving average, our 189, so 190, let's say, at the 100-day moving average, and 165. Now, I already know my position. If you have been following along with the weekend editions of Wealth Down, you know that I sold every last bit of my NVIDIA shares. Why? Simple. I saw other opportunities. Maybe I'm wrong. Maybe I'm not. But that's how I trade. How I invest, that's a different kind of story. So how I trade is when something like this happens, and they're not number one in the game, then I would say take some profits, because it could go up, but it also could go down. And the chances are 50-50 from here. Now, somewhere down here, where you know that even if this stock is not going to be number one, it's going to be number two. So it will most probably go upwards after everything with the tariffs was cleared. But at this point, that's really risky. Let's also take a deeper dive into technical analysis. Let's see here on the dailies again, it is not yet oversold, and also a MACD buy signal is trying to return, or actually the MACD is trying to return to a buy signal with a positive divergence here. The stock is in the Ichimoku cloud above the cloud, so strong driver there. Could the stock go even higher? Yes, it could. How high could it go further? Well, as I said, the next step here in my technical analysis for the stock with the Fibonacci extension would be, the next price level would be 300. Perfect psychological level. Does the stock want to go to 300? I believe it wants to go to 300. Will it do it in the next couple of days? I don't think so. Let me also delete a couple of these lines. We have up here the 300 level at the 125 Fibonacci extension, and we could see the stock go up here. But that is where, so if it has a major pullback on the market as an entire market, if it has a pullback down in these levels, this could set up a trade. So somewhere between the 235 levels and 215 levels, it could set up for a perfect trade, for a perfect next leg up. So doing something like this, come down, test these levels, go up and come down again and go up again and end up right here. And after that, I believe the probabilities are really high that it's going to come down back again. But for now, because it does have momentum behind it, we could see a rally in the stock market with the Santa Claus rally. So everything is possible for the stock to go even higher. It was already in the MACD buy signal. It's trying to trigger now. It was already in the MACD sell signal. It's trying to trigger now a buy signal. So this could go even higher. If you have the shares, I wouldn't sell them right now. My personal movement was my personal movement. I wanted to invest the money somewhere else. But you should think about the possibility of this going to 300 is not that far away. Just needs a little bit of oomph. Don't forget that there is, at the beginning of December, a rotation coming, a reallocation coming from the big investors. They have to reallocate their positions, rebalance their positions. So you could see some movement here. If you see a good pullback, because it needs a good pullback now, AMD, in order to have its leg even further high, and not necessary for some great news, just because investors believe in it. You see the earnings projections, they are good. Let's be honest, they are good. The fundamentals are good. The earnings projections are good. So if there is a pullback, I would personally add to it, or I will add to it. At the current moment, I would just let it take off some steam here. For an options trade, maybe do here a strangle. I've been thinking about the strangle for December, for 19th of December. Maybe that's even a little bit too close to the future. Maybe do a January, but also a strangle for December, especially if you have the stock. You could sell it at 300. If the call side will be challenged, sell your stock at 300. If you have the buying power, buy it at 200, sell, close the leg from the call and buy it at 210. You have bought AMD at 210. That is exactly where I told you, between the 20 and the 50-day moving average. Actually, a little bit beneath the 50-day moving average. There is one standard deviation. Or I did set it up. Yep, exactly underneath of one standard deviation. So perfect setup for this. With this being said, hope you enjoyed this video. If you have any kind of questions or suggestions, leave them in the comment section below. I'm Norbert Menhardt. I build and protect wealth right here at Wealth Dawn. Take care. Catch you next time. Bye-bye. Bye-bye.